H2O Corporation purchased equipment for $60,000 on January 1st, 2018. It was depreciated based on a 7-year life and an $18,000 residual value. On January 1st, 2020, H2O revised these estimates to a total useful life of 4 years and a residual value of $10,000. Prepare H2O's entry to record 2020 depreciation expense. Assume that H2O follows IFRS and uses straight line depreciation. So in this question, we're being asked to prepare 2020 depreciation expense. Now, why do you think it's not asking us for a journal entry to correct depreciation back to 2018? Because that's when the equipment was originally purchased. Yes, you're right. The reason is because we account for changes in accounting estimates prospectively, and changing between two different policies of depreciation, assuming that it's based on better information about the asset, is a change in accounting estimate, meaning we don't need any entry to retained earnings here. Simply, we're being asked to record 2020 or the current year's depreciation expense. So let's take a look at what that is going to be. So what is the carrying value of the asset? Let's start with that. The asset. So we are going to have, so the asset was purchased for $60,000 and we recorded, it was based on a 7-year life and an $18,000 residual value. So if we had $60,000 minus the residual value, so we thought it was going to have an $18,000 residual value, and we're going to depreciate it over 7 years. That means that the depreciation each year was, isn't like my comma there, that means the depreciation each year was $6,000. So we had $60,000 was our original cost. So we had 2018 and 2019. So we had 2018 depreciation would have been $6,000. And 2019 depreciation would have been another $6,000. So that means my carrying value, my opening carrying value, opening 2020 carrying value is going to be, just fix this up a little bit. It's going to be 60 minus 6 and minus 6 means my opening carrying value is going to be $48,000. So now my depreciation for 2020 is going to be $2020 depreciation. So I'm going to have depreciation. So I'm going to have, my typing is not going good here, is it? 2020 depreciation. So I'm going to have, so I'm going to take the, I'm going to have the carrying value of the asset minus my new residual value. So now I think it has a $10,000 residual value. And we said that originally the estimated life of the asset was 7 years, but now we think it's only 4 years. So how many years do we have left from 2020? Well, we have 20, so we bought it in 2018, so we're going to have 2018, 2019, 2020, and 2021. So there's only 2 years left, so we're going to divide it by 2, because 2020, which is the current year, and then the next year, which is 2021, that means we are going to have depreciation expense in 2020 of $19,000. So let's just record our journal entry then. So we're going to have debit depreciation expense for $19,000. And credit accumulated depreciation for another $19,000. And there you go. That's how you account for a change in accounting estimate prospectively. And here we were specifically asked to calculate 2020 depreciation expense. So we needed to figure out what the original carrying value of the asset was, what our remaining useful life was, and do some math to figure out that our current depreciation expense for 2020 would have been $19,000 and record the journal entry for that.